Welcome back to Being Financially. Airbnb or Uber before they hit the stock market. That's the power of pre-IPO investing, and in 2025, regular investors are finally getting a chance. But is it too good to be true? Let's break it down. Pre-IPO investing allows investors to purchase shares of a company before it goes public, often at a lower price. This gives investors the opportunity to potentially see massive returns once the company goes public and the stock price soars. Just think about being an early investor in companies like Facebook, Airbnb, or Uber and reaping the rewards of their success. In 2025, the playing field for pre-IPO investing is starting to level out, with more opportunities becoming available to regular investors. This exciting development means that everyday people like you and me now have a shot at investing in the next big thing before it hits the stock market. However, with great opportunity comes great risk. Investing in pre-IPO companies can be highly speculative and not without its challenges. It's important for investors to do their due diligence, understand the risks involved, and be prepared for the possibility of losing their investment. In pre-IPO investing in 2025 offers an exciting chance for regular investors to get in on the ground floor of potentially groundbreaking companies. But it's crucial to approach this opportunity with caution, research, and a clear understanding of the risks involved. So, if you're thinking about diving into pre-IPO investing, make sure you're well informed and ready to seize the opportunity of a lifetime. Have you ever heard of pre-IPO companies? It's like getting a backstage pass to a company's biggest show. Let's break it down. First off, what exactly is a pre-IPO company? Well, it's a company that is on the brink of going public by offering shares to the public for the first time. However, before they take this big leap, they operate as a private company, often with a limited number of shareholders. Now, you might be wondering why a company would choose to stay private before going public. There are actually a few reasons for this. For one, staying private allows a company to avoid the extensive regulations and disclosure requirements that come with being a publicly traded company. This means they have more flexibility in their operations and can keep their financial information private. Additionally, staying private gives the company more time to grow and develop their business without the pressure of meeting quarterly earnings expectations from shareholders. One of the most exciting aspects of investing in a pre-IPO company is the potential for significant valuation growth before they go public. When a company is private, its valuation is typically based on the opinions of private investors and is not subject to the same market forces. As a publicly traded company, this means that investors who get in early have the opportunity to see their investment grow significantly as the company continues to expand and increase in value. Think of it as investing in a small, up-and-coming band before they hit the big time. If they make it big, your early support pays off big time. So, there you have it. Pre-IPO companies offer investors the chance to get in on the ground floor of a potentially successful company before they make their big debut on the stock market. It's like getting a sneak peek at a blockbuster movie before it's released to the public. Who wouldn't want to be a part of that? Are you ready to witness the game-changing year of 2025 with the emergence of new platforms such as EquityZen, Forge Global, and StartEngine Secondary? Access to investment opportunities has never been easier. These platforms are revolutionizing the way accredited investors can participate in private markets, opening up a world of possibilities for those looking to diversify their portfolios. But that's not all. Regulatory updates are also set to expand accredited investor access, further leveling the playing field for those looking to invest in promising startups and high-growth companies. The changes in regulations are breaking down barriers and providing more individuals with the opportunity to participate in private investments, creating a more inclusive and dynamic investment landscape. And if that wasn't enough to get you excited, more tech unicorns are gearing up for IPOs. In 2025, companies like Stripe, OpenAI, and many others are on the brink of going public, offering investors the chance to be part of their growth and success. These tech unicorns are at the forefront of innovation and disruption, and the opportunity to invest in them is one that should not be overlooked. The year 2025 is truly set to be a game changer for investors, with new platforms simplifying access, regulatory updates expanding opportunities, and a wave of tech unicorns preparing for IPOs. The investment landscape is evolving in unprecedented ways. It's time to take advantage of these exciting developments and seize the opportunities that 2025 has in store. Don't miss out on this pivotal moment in the investment world. The future of investing is here, and it's full of potential. Are you looking to invest in pre-IPO companies, but unsure where to start? Here are some ways you can get in on the Action A direct platforms. Forge Global, EquityZen, and Linqto are all direct platforms that allow you to invest in pre-IPO companies. These platforms typically have minimum investment requirements and may charge fees for their services. If you're looking for a convenient way to access these opportunities, direct platforms could be the way to go. B. Angel investing platforms like AngelList and SeedInvest offer opportunities for angel investing in pre-IPO companies. Angel investing typically involves investing in early-stage companies, but it can also include later rounds of funding. If you're interested in getting in on the ground floor of promising startups, angel investing could be a good option for you. C. Venture funds, private equity. Another way to invest in pre-IPO companies is through venture funds or private equity. You can participate in these opportunities via syndicates or feeder funds, such as the Fundrise Private Tech Fund. This option allows you to pool your resources with other investors to access a diversified portfolio of pre-IPO companies. D. Employee share buyouts. In some cases, you may have the opportunity to participate in employee share buyouts on the secondary market. While this option is rare, it is possible for employees to sell their shares to individual investors. Keep an eye out for these unique opportunities. If you're interested in investing in pre-IPO companies, whether you choose to invest through direct platforms, angel investing, venture funds, private equity, or employee share buyouts, there are various ways to get involved in pre-IPO companies. Do your due diligence and choose the option that best aligns with your investment goals and risk tolerance. Happy investing. When it comes to investing, there are two main categories of investors: accredited and non-accredited. But who can and should invest? Let's break it down. Accredited investors are typically high net worth individuals or institutions who meet specific income or asset requirements set by the Securities and Exchange Commission. On the other hand, non-accredited investors are everyday people who do not meet these criteria. So, can non-accredited investors still invest? Absolutely. Ideal investors, regardless of accreditation status, share similar traits. They have a high risk tolerance, a long-term focus, and a diversified investment strategy. These qualities are essential for weathering market fluctuations and achieving long-term growth. For those looking to dip their toes into the investment world, starting small with pre-IPO funds or secondary markets can be a great first step. These opportunities allow investors to get in on the ground floor of promising companies before they go public, potentially reaping significant rewards down the line. So, who can and should invest? Anyone with a high risk tolerance, a long-term focus, and a diversified strategy. Whether accredited or non-accredited, there are opportunities out there for all types of investors. Start small, do your research, and watch your investment portfolio grow. Final tips: strategy. When considering investments in pre-IPO companies, it is crucial to diversify your portfolio across multiple opportunities. Don't place all your bets on one unicorn. By spreading your investments, you can mitigate risk and potentially maximize returns. Look for pre-IPO companies with real revenue and a clear path to IPO. Companies that have demonstrated sustainable revenue streams are more likely to succeed. Post-IPO, do your due diligence and research thoroughly to identify promising Investment opportunities. Stay informed about the upcoming IPO pipeline, monitoring the market, and staying up to date with new opportunities will help you make informed decisions and spot potential winners. Before they go public, avoid the trap of FOMO, fear of missing out, and instead be strategic in your investment approach. Don't make impulsive decisions based on hype or trends. Take the time to assess the fundamentals of each opportunity and make calculated investment choices. In conclusion, diversification, thorough research, active monitoring, and strategic decision-making are key components of a successful pre-IPO investment strategy. By following these final tips and strategies, you can position yourself for potential success in the ever-changing world of pre-IPO investing. As we wrap up our discussion on pre-IPO investing, it's clear that this strategy can potentially lead to significant gains. However, it's crucial to approach it with caution and intelligence. Before diving in, take the time to research the right platforms and thoroughly analyze your options. Remember, diversification is key to mitigating risk in this high-stakes game. If you feel ready to explore these enticing opportunities, now is the time to take action. Don't let fear hold you back from potentially lucrative investments. Venture into pre-IPO investing with a well-thought-out plan and a balanced portfolio. And don't forget, your journey towards financial growth doesn't have to be a solitary one. Engage with us, ask questions, and share your experiences in the comments section below. Let's build our financial knowledge and wealth together. Like, subscribe, and stay tuned for more valuable insights. So, are you ready to explore the world of pre-IPO investing and unlock its potential for outsized gains? Start your journey today, and remember, the key to success lies in playing it smart. Let's embark on this exciting adventure together and grow financially, hand in hand. Thank you for joining us on this journey.